Hi, this is Zach Muir from Zach's Traders Cafe with a look at some major markets on Friday the 7th of October. Starting off with the FTSE 100 and pulling back a bit from the best levels, but the key here it is that we hold 69.40, which was the September resistance zone. Above that, one would be a buyer on the dips rather than selling to strength. And obviously, we're in the run-up to the non-farm payroll data later this afternoon. That could or should change the picture. End of day close below 69.40, a warning sign. Otherwise above that, best case scenario target here towards 7,400, the top of a June rising trend channel. For the DAX, a bit more complicated than the FTSE at the moment. Got this messy price action either side of the 50-day moving average at 10,517. We also filled the gap, top of the gap at 10,610, and then came back this week, so that's a negative. Probably the best thing here is to wait for a break of this resistance line here, running through towards the 10,620 zone. At least while we're below that, there may be some opportunities for traders to trade this market short. RSI has also fallen below 50, which is a possible sign that we've run out of steam over the near term. End of day close day below the 50-day moving average would certainly be a negative for next week. Onto the US markets, and here we've got the Dow, where we've got the narrow range, which has been dominating so far this week. If we just get that on the screen now. Situation is 18,100 is the main support line from May. Well, between that and the 50-day moving average, 18,377. End of day close outside that would be the big signal for this market. The gap down earlier last month suggests that we would actually be looking for a move to the downside, but obviously with these things, the best thing is to wait for confirmation of the move either on an end of day close basis or longer. But as things stand, probably towards the downside, but we will see what happens later today. On to the S&P, and here we've got a similar position with 18,100 being replaced by the 1950 zone. You can see here the line from May remains in place, heading towards 2140. End of day close above the 50-day moving average at 2167 would be the buy signal, and telling us really that this market could head towards the top of a rising May trend channel at 2220 over the following 2 to 4 weeks. But we do get that sub 2140 end of day close, that would be a potential strong sell signal. So especially after we've been in this consolidation over the last few weeks. Onto the Nasdaq, which has persistently been the strongest of the big three US benchmarks. This starting to tire a little bit, but still holding above the 20-day moving average of 48.26, and really while there's no end of day close back below that, we are still looking towards the 5,000 area. Big story of the day remains the pound and its flash crash overnight. Here we've seen this market head towards the floor of a falling trend channel and June support line at 120. The low here at 119.50. So one would expect at least a partial retest of that over the next week or so. RSI 21 very oversold, but not totally in the extreme area yet. So around 120 could still be hit over the next few sessions. At this stage, only really well above 125 would suggest that we'd formed at least an intermediate low for the UK currency. On to euro dollar, and the initial signs here of a break to the downside, breaking this triangle that's been in place since the beginning of August and falling below the 200-day moving average at 111.66. End of day close below this 200-day line would suggest that we're heading back to sub 110, $1.10. Otherwise, we really want to see a break above the 50-day moving average at 112 to bring in the idea of a bear trap and a recovery to take this market higher. Dollar yen probably been the most normal of the major currencies this week, breaking through the 50-day moving average and now flirting with initial September resistance of 104.32. End of day close above that should lead us quite quickly towards 107.50, which was July resistance. Stop loss on the buy argument at the moment, probably that last September peak at 102.79. Finishing off with gold, which was the big mover earlier in the week. Initially, we've got support coming in towards the 200-day moving average of 12.59. My suggestion here for TipTV yesterday was to be buying on dips towards 12.50, and so far that looks to be correct. If you're cautious, maybe wait for an end-of-day close above the 200-day moving average before targeting a partial rebound towards 12.70 to 12.80. That's it for me. More updates at the same time on Monday.